Investors, welcome to Stock AI Insights. This is earnings analysis. I'm your AI analyst. This content is for educational purposes only and does not constitute investment advice. Investing involves risk.
All right, let's dive into it. We're looking at Tencent Music Entertainment's Q3 2025 numbers, which they just dropped on November 12th. Now, TME is, a huge player in China's online music scene, and these results, they tell a really interesting story. It's all about a big strategic shift they're making.
And wow, that headline number really jumps out at you. We're talking 20.6% revenue growth year over year. That's the best they've done since way back in Q1 2021. So this isn't just steady growth. It's like they've hit the accelerator. The big questions are, right, how they pull this off, what's it doing to their profits, and where are they headed from here?
Okay, so here's how we're going to break it all down. First up, we'll get into the revenue. Then we'll check out the profit picture, and finally, we'll look at what they're saying about the future. Simple as that. Let's get right into it.
So first up, revenue. And honestly, the best way to think about it is like a vehicle with two engines. One of them is just firing on all cylinders, pushing them forward like never before, while the other one is kinda sputtering. So that top line number came in at 8.46 billion RMB. Again, that's that huge 20.6% jump. And get this, it also beat what Wall Street was expecting. They were looking for about 8.23 billion. So that's a solid beat, shows they're really executing well. But the real story, the crucial part, is digging into where exactly that growth is coming from.
And when you look at those two engines, man, it's a night and day difference. One is just absolutely roaring ahead, while the other one, well, not so much.
And here it is, laid out plain as day. Look at the online music side of the business. That's your subscriptions, ads, merch, all that stuff. It exploded, up an incredible 27.2% to almost 7 billion RMB. But then you look at social entertainment, which is mostly their live streaming, and it actually went down by 2.7%. This isn't an accident. It's a crystal clear sign of where the company is shifting its focus. And the executive chairman, Ku Peng, pretty much spelled it out for us. He said their innovations are driving the subscription business for sure, but they're also firing up other areas, things like live concerts and artist merch. Basically, they're not putting all their eggs in one basket anymore. They're building a much stronger, more diverse business. And you can really see that strategy paying off. The CFO pointed out that their offline shows, think about that huge G-Dragon tour, saw triple-digit growth. Yeah, you heard that right, triple-digit. And artist merch is growing strong too. So these aren't just little side hustles anymore. They're becoming a real part of the story.
Now, check out this chart. It really shows you what's happening. Last year, online music was about 78% of the pie. Now, it's up to 82%. You can see it right there. TME is successfully shifting its entire business model towards these higher quality music revenues. So that's the revenue story. Let's see how that flows down to the bottom line.
All right, on to part two, profitability. And, with that kind of revenue growth coming from the right places, you'd expect profits to look pretty good. And they do. But there's a little but here, a note of caution we definitely need to talk about. So, the big number on the profit side is a 32.6% jump in their adjusted net profit. Now, here's the key thing. Profit is growing even faster than revenue. Whenever you see that, it's a fantastic sign. It means the business is becoming more efficient, more profitable for every dollar it brings in. And a huge reason why is the expansion of their margins. Gross margin climbed to 43.5%. That's up from 42.6% last year. It just goes to show that big pivot to online music we talked about, it's not just about more sales, it's about more profitable sales. The CFO, Shirley Hu, broke it down for us. She said it comes down to a few things: great growth in subscriptions and ads, which have great margins, and paying out less in revenue sharing for that social entertainment business that's shrinking. It's a perfect storm of positive changes to their business mix. Okay, so things are looking good, but here's that but I mentioned. The big question is, can they keep this margin growth going? Because while the main business is getting stronger, these new growth areas, they change the math a little bit. And this is what analysts are watching closely. The CFO was upfront about it. Things like live shows and merch, while they're growing fast, just don't have the same high margins. So as they get bigger, they could actually start to drag the company's overall margin down a bit. It's definitely something to keep an eye on.
But as you can see on this chart, for now, the trend is definitely your friend. Both the total gross profit and the margin percentage are heading in the right direction, up. It shows that, at least for now, the strength in the core business is more than making up for those lower margin growth areas.
All right, let's wrap this up with our final section, the outlook. This is where we get to the real puzzle of Tencent Music's story, and it's all about the users. So, management's game plan is pretty clear. The chairman says they're sticking with this dual-engine strategy, trying to build this huge all-in-one music platform. What that really means is they're doubling down on premium stuff, more services, and finding more ways to make money from their users. But underneath all that confidence, you find the company's biggest long-term challenge, and you see it the second you look at their user numbers.
Just look at this table. Their total monthly active users actually went down 4.3%. But, and this is a huge but, the number of people paying went up by 5.6%. And even better, the amount of money they make from each paying user shot up by more than 10%. So, what's happening? They're losing some casual listeners, but they're getting way better at making money from their core, dedicated fans. And that right there is the million-dollar question for anyone looking at this company. Can they keep growing the number of paying users and how much they pay fast enough to make up for the fact that their total audience is shrinking? The whole long-term story really hangs on that question. Let's look at one last chart because it really sums everything up perfectly. See that bar on the left going down? That's the total users. But then look at the two bars on the right, both going up strong. That's paying users and revenue per user. It's the classic quality over quantity play, and right now it looks like it's working. They're getting more from less. So, what's the final takeaway here? My analysis verdict is this. Tencent Music's Q3 was a big success. It shows their pivot to higher quality music revenue is working and it's profitable. But, and it's a big but, that slow, steady decline in their total user base is still the #1 long-term problem they've got to solve.
Drop a 1 in the comments. See you in the next earnings breakdown.